Hey Kyle, this is Ryan with TrendLizard.com. Hey, thanks for being a member of the TrendLizard community, and thanks for sending me those three tickers via email. And we're just going to go down the list and take a look at each one and see if we can figure out where they're heading in the every major time frame, just for a trading perspective. So first up is DSX. Let's jump into the long-term chart here. It was incepted back in 2005. And it's had a pretty rocky road since then, as I'm sure you're very well aware. It went up in 2006 to 2007. 2008, it began a decline that it has continued through the present day. So basically, it's been in a downtrend for 8 years. There's a decent chance that the entire downtrend is not too far from completion and that it's actually one massive, huge counter trend move. But the fact of the matter is it's still in a downtrend, and I'm assuming that you're looking at this as kind of a value play, something that you can buy on the cheap, and knowing that it's been up at 36 and that you can buy it for somewhere around 3, that you're getting a pretty good value. But based on this, this isn't a good starting point. You normally want to find something that has momentum on its side or has some kind of uptrend, or at least the potential that it's starting an uptrend, and that just doesn't seem to fit the bill here with DSX. And as we zoom in, I'll show you a little bit more why. So if we focus in on the declining portion of the move from 2014, this does look like a trendy move to the downside. So you have a trend, it's just not up. So it's been, again, going down from 2014, had a reprieve here in 2015, tanked again into the start of 2016, and it's been back and forth since then. So maybe if this move in 2016 had a trendy look to it, you'd say, hey, this could be a buying opportunity, but it really doesn't. There's nothing that suggests that this is going to turn up from here and reverse its fortunes from the 2011 low. If we zoom in, this is what I'm talking about, the 2016 move. Just a choppy mess. This looks like a counter trend move. Nothing here suggests that this big downtrend is over. In fact, it looks more likely that it's going to continue. Probably what's going on here is a fourth wave recovery in 2016. May continue, may not. It's pretty impossible to tell what's going to happen with a counter trend move, which is exactly why we stay away from them and why we trade trends. So once this thing completes, at some point it's going to continue down and could get real cheap. Who knows what that actually does for the stock, but it doesn't look like a great trading opportunity. For things to change, we'd have to see some kind of trendy move, some kind of 5-wave advance emerge out of this mess, or at any point really, or at least, or a move above 6. Obviously, you don't want to wait until this stock doubles to buy it, but as far as the hard facts go, that's what would have to happen for there to be anything bullish about this chart. So from an Elliott wave perspective, I would recommend staying away from this. I guess it could be a shorting opportunity, but I'm guessing that's not what you're after. Normally, it's pretty hard to short a stock that's cheap, trading as cheap as this. So it looks bearish, and I would not trade it at this time. So I hope that's helpful. We'll get on to the next one in just a minute. Thanks.